Right, let's jump straight into this explainer. We're looking at the absolute chaos and mystery behind Bitcoin's rise from a seemingly worthless internet experiment to a massive global asset. This isn't just a dry story about finance. We're talking money, obsession, and a mysterious creator who basically shifted the tectonic plates of the financial world and then pulled the greatest vanishing act in internet history. $0. Just really wrap your head around that for a second. Imagine an asset worth absolutely nothing, less than the spare change lost in your couch cushions. A decade ago, people openly laughed at this concept. To them, it was fake internet money, a toy for computer geeks. And yet, this thing that started at literal zero became one of the most expensive assets on the planet, completely defying every rule of traditional logic. So here's a wild thought for you. What if trying to remember a forgotten password was the only thing standing between you and generational wealth? Because for a lucky few, a couple of bucks spent years ago, or a forgotten stash of coins sitting on some dusty old hard drive, turned into overnight millions. But, it wasn't a fairy tale for everyone. While some got wildly rich, others lost absolutely everything. And it's all tied up in this massive, unsolved mystery that we're unpacking today.
Which brings us to our first major chapter, the Genesis and the Ghost.
To really grasp this whole digital revolution, we have to rewind to the 2008 financial crisis. You remember the panic, right? Banks were failing, markets were crashing, and everyday trust in the traditional financial system was just completely shattered. And right in the middle of that mess, a totally radical contrast emerged. The old world was all about trusting institutions, banks, governments, central authorities. Bitcoin flipped the script entirely. It asked, what if we replace all that institutional trust with pure math, with peer-to-peer code? Suddenly, it was a system where money could move across the globe without asking anyone for permission. Now check out this exact quote. It's a newspaper headline from the Times about bank bailouts, and it was permanently hard-coded into the very first Bitcoin block by its creator, the phantom known only as Satoshi Nakamoto. This wasn't just a random timestamp, folks. It was a loud, defiant statement. A warning, basically. A line drawn in the sand against the old financial system. And the craziest part? To this day, we still have absolutely no clue who Satoshi actually is. Looking at the timeline, the progression is honestly fascinating. Satoshi drops the white paper in 2008, launches the first block in January 2009, works with a few developers online for a bit, and then, poof, gone. Just vanishes into the digital ether. No goodbye tour, no media interviews. By stepping away, Satoshi let this creation take on a life entirely of its own, paving the way perfectly for our next major milestone in 2010. And that takes us right into Chapter 2, the era of pennies and pizzas. You gotta remember, back in the early days, Wall Street wanted absolutely nothing to do with this. This was a quirky digital experiment mined by hobbyists and dreamers running old laptops in their garages. It had almost no real-world value. And honestly, nothing sums up that era better than the number 10,000. In 2010, one famous early adopter actually spent 10,000 bitcoins just to get 2 pizzas delivered. At the time, it was a fun win to prove you could trade digital coins for something physical. But today, it's the ultimate illustration of just how incredibly cheap these coins were at the start. Back then, people were buying it for literal pennies or just mining it for fun. So the wildest thing is that those legendary overnight millionaires we always hear about, they usually weren't financial geniuses. They were just early believers who refused to sell, or, incredibly, people who completely forgot they even had it stored on some old hard drive. It wasn't about masterminding the market. It was about massive, life-altering consequences springing from tiny, almost accidental choices. Of course, things didn't stay quiet for long. Welcome to Chapter 3, the roller coaster. As the network expanded and the price actually started climbing from fractions of a cent to real dollars, the mainstream suddenly stopped laughing and started paying very close attention to the shocking wealth being generated. But man, this journey was absolutely not a straight line up. It was a gut-wrenching, volatile ride. We're talking massive euphoric price spikes followed almost immediately by devastating 50 to 70% crashes. Every single wave of new believers had to face the brutal reality. This asset could make you rich, but it could also make you panic. And a huge part of that panic was driven by massive external failures, like Mt. Gox. Back then, Mt. Gox was the central hub for trading. So when it famously collapsed, it became the ultimate symbol of loss and shattered trust. It was a brutal lesson for early adopters, proving that even if the underlying Bitcoin code was secure, the human-built exchanges around it could completely fail. Extreme risk was just permanently baked right into the ecosystem's DNA. Which perfectly tees up Chapter 4, The Psychology of the Hold. Surviving those stomach-churning crashes and exchange failures required immense mental fortitude. Making life-changing money here wasn't just a financial game. It was equally, if not more so, a massive psychological test. Look, it sounds incredibly easy to just buy an asset and sit on it, right? But put yourself in their shoes. Imagine watching your portfolio plummet by 70% in a matter of days. Pure panic sets in. Your heart is screaming at you to sell and salvage whatever you have left, while your logical mind whispers to wait. Fighting through that terrifying uncertainty, holding on when everyone else is hitting the panic button, that is the actual unglamorous secret behind the millionaire headlines. Let's shift gears now to Chapter 5, The Anatomy of Value and the Dark Side. So the big, logical question. How does a digital coin, one with no government backing, no corporate headquarters, and no physical form, actually hold any real tangible value in the market? Well, it's essentially a powerful engine running on three main pillars. First up, scarcity. The supply is strictly limited and cannot be changed. Second, trust. People genuinely believe the underlying mathematical system works. And third, the network effect. Just like a social network, every new person who joins makes the whole system more robust and useful. In this world, collective belief literally creates the market. But we have to look impartially at the complete picture. For every glorious story of the dream, paying off debt, buying houses, securing generational wealth, there is the reality. There are harsh, tragic stories of people losing passwords to multi-million-dollar wallets, getting completely wiped out by devastating hacks, or just losing their life savings by panic selling at the absolute bottom. The exact same chaotic force that created fortunes also humbled a lot of people. Finally, after all the explosive booms, the crushing busts, and the flashy headlines, we arrive at Chapter 6, The Final Mystery. And that brings us right back to Satoshi's legacy. Satoshi walked away, left absolutely zero central authority in charge, and just allowed the network to survive on its own merits. Think about it. If we actually knew exactly who created Bitcoin, the story might feel kind of small, just another tech CEO. But Satoshi Nakamoto's disappearance proved the most crucial point of all: the network did not actually need its creator to keep ticking. The creator vanished, but the revolution stayed. By pulling the ultimate ghosting move in complete silence, Satoshi guaranteed that this concept, money built on code without central permission, could completely outlive its founder. There was no leader to arrest or pressure, meaning the network couldn't easily be shut down. That is how it evolved from a neat little software project into an unstoppable, decentralized global phenomenon. So as we wrap up this explainer, the whole Bitcoin saga leaves us staring at a profound, almost philosophical challenge to the way we view the world. It forces us to ask, what is money really? Is it the physical cotton and linen papers sitting in your wallet? Is it just lines of encrypted code on a decentralized ledger? Or is it simply belief, just the shared trust of the people using it? Give that a think, because however you answer that question, it might just completely change how you view the future of value itself.